Have you ever wondered why some traders consistently win while others keep bleeding money? Just think about it. How many times have you entered a trade based on what looked like a perfect setup, only to watch the market immediately move against you? Or how many times have you seen a signal, hesitated because you weren't sure if it was real, then watched that move happen exactly as you predicted while you sat on the sidelines? Or worse, how many times have you been stopped out by market noise, only to watch the price reverse right back in your original direction minutes later? How come the more indicators you add to your charts, the more confused you become about when to actually pull the trigger? You study RSI, MACD, moving averages, support and resistance, but somehow your signals keep getting you into trouble. You're getting whipsawed left and right, and you're starting to think that maybe trading just isn't for you. Now, if this is you, your problem is signal clarity. Most traders are drowning in noisy, conflicting signals that lead to hesitation, bad entries, and unnecessary losses. But what if I told you that there's a hidden gem that filters out all that market noise and gives you crystal clear buy and sell signals? This is a buy signal. Watch what happens next. Boom, massive profit. And here, this was a sell signal. Look at this incredible move downward, another win. Even without any fancy confirmation tools, this indicator works absolutely well. Here's how to access this powerful tool that most retail traders have never even heard of. Go to TradingView and open any trading pair you want. I'm going to use the 1 hour time frame of this pair. Click on Indicators and type in 2-pole oscillator. Make sure you select the one by Big Beluga. This oscillator is a revolutionary trading tool that identifies momentum, trend strength, and trade signals with minimal noise. Let me show you the powerful components that make this indicator so effective. First thing you need to do, double-click on the indicator, navigate to the Style tab, and activate the Last Plot option. Watch this. A thin blue line appears. This is your signal line, and it's about to become your new best friend. Next to this signal line, you'll notice the oscillator itself, switching colors between purple and blue. This color coding is crucial for reading market momentum. Pay close attention to what happens when these two lines interact. Every time the oscillator crosses above the signal line, bam, a buy signal prints. That same buy signal appears on your chart as a blue upward arrow. When the oscillator drops below the signal line, a sell signal is generated, marked with a downward arrow on your chart. Here's something that separates the pros from the amateurs. Notice those dotted lines next to every signal? These are called invalidation levels, and they're your golden ticket to proper risk management. Bullish invalidation levels appear near buy signals, while bearish invalidation levels show up near sell signals. These levels are critical because they serve as your natural stop-loss placement zones. Watch what happens when price touches an invalidation level. An X label appears. This tells you the market moved against your signal and invalidated your trade. If you had positioned correctly with stops just beyond these levels, you would have been protected. Here's the mind-blowing technology behind this indicator that makes it so accurate. The oscillator calculates price deviations from a mean value, then applies 2-pole filtering to smooth out the signal. This isn't basic smoothing. This is advanced signal processing. 2-pole filtering reduces noise while preserving important trends by applying 2 layers of smoothing. The result? A crystal clear signal that cuts through the market chaos. Once signals generate, they're color-coded for instant recognition. Blue signals indicate bullish momentum, time to think long. Purple signals appear when momentum turns bearish, time to consider short positions. Want to customize this weapon to match your trading style? Let me show you the settings that can make or break your results. Go back to the indicator settings and hit the Style tab. You can disable the Last Plot option if you prefer a cleaner look. On the Inputs tab, you'll find the filter length and filter settings. This controls how much smoothing gets applied to your oscillator. A higher filter length creates smoother signals by reducing short-term noise, but it may introduce lag in detecting trend changes. A lower filter length makes the oscillator more responsive to price movements, but it might produce more false signals due to increased sensitivity. Adjusting this setting lets you customize the balance between smoothness and responsiveness based on your trading style and current market conditions. You can also toggle the invalidation levels on or off. For the strategy I'm about to reveal, you need these levels for stop-loss placement, so keep them enabled. I'm sticking with default settings because they're already optimized for maximum performance. Here's where most traders get it completely wrong. Let me show you how to properly identify overbought and oversold conditions using this indicator. Look at the indicator scale. We have a midpoint at 0, additional levels at plus 0.5 and minus 0.5, and extreme levels at plus 1 and minus 1. A market becomes overbought when the oscillator climbs above plus 0.5 or strongly overbought above plus 1. This signals high probability of a pullback. Conversely, the market enters oversold territory when the oscillator drops below minus 0.5 and becomes extremely oversold below minus 1. Now here's where we take this from good to absolutely incredible. We're going to combine this with another secret weapon. Add the volumetric variable index dynamic average, also known as the VIDYA indicator. This is where the magic really happens. Once added, double-click on it, change the VIDYA length to 34, go to the Style tab, disable the length option, and click OK. This trend indicator shows a green ribbon for bullish trends and a red ribbon for bearish trends. But here's the game changer. It measures trend strength using delta volume. A trend is considered strong enough only if the delta volume reaches at least 20%. This single number can completely transform your trading results. Ready for the exact entry conditions that professional traders use? Pay close attention. For a long trade, you need a buy signal printed with a strong bullish trend. See this dot? This represents our buy signal. But here's the crucial part that most traders miss. This buy signal is only valid if it prints under the 0.5 level, that gray line. If it prints anywhere above that line, the entry becomes invalid. Oh no, this could save you from countless losing trades. Condition number 2. At the exact moment the signal prints, the VIDYA indicator must be colored green, indicating a bullish trend. We also need to verify the delta volume. It must be at least 20% to confirm a strong trend. Right now, look at this. It's well above 20%. This means the trend has enough power to push prices higher and higher. Here's something critical that most traders don't know. The long signal from the two-pole oscillator gets delayed by 2 candles. Notice how the signal appears on this candle but doesn't show up until after these candles have passed? We're not entering on the signal candle. Instead, we enter after the close of the second candle. This timing is everything. Take the long position, place your stop loss right under the invalidation level, that dotted line right there. Set your take profit at 1.5 times the risk. Watch what happens. The trade becomes profitable. This is the power of proper signal confirmation. Here's another perfect long setup. Notice the buy signal? It's valid because it printed under the 0.5 level, that dotted gray line. Check the VIDYA indicator. Green, confirming bullish trend momentum. Delta volume shows above 20%. The trend has sufficient strength to drive prices higher. We take the long position, place stop loss below the invalidation level, and target 1.5 times the risk for take profit. Result? Another profitable trade. This strategy is absolutely crushing it. For short positions, we flip the script completely. Condition number 1, we need a sell signal from the two-pole oscillator. Look at this example. The sell signal was valid because it printed above the 0.5 level, that gray horizontal line. Check the VIDYA indicator, red, confirming bearish trend direction. The delta volume shows this value, well below the minus 20% threshold. This indicates a powerful bearish trend with enough momentum to drive prices down. We take the short position, place stop loss above the invalidation level, and set take profit at 1.5 times the risk. Watch this move. Profitable again. This system is absolutely incredible. Most traders spend years trying to find a system this accurate. You just learned it in one video. So hit that like button and subscribe for more game-changing trading content.